So January stronger than forecast. Revisions show a little bit of a different picture. What's your read on the U.S. labor market and why?
Yeah, so I mean, for those of us that had forecast a recession in 2025 because of policy uncertainty, because of tariffs and other changing policies, I suppose one could say it feels a little vindicating because we did have a bit of a labor market recession, although other aspects of the economy were firing all cylinders. And I was at Davos last month, and the thing that I heard over and over again from companies, and not just U.S. companies, was we put ourselves on hold in 2025, and we are done with that. The tariffs are bad. They're worse than was originally expected, less bad than originally announced. And all of the other policy uncertainty, I think, to borrow a phrase, the corporate leaders are getting uncomfortable being uncomfortable. And so they're just viewing of it's time to get on with it. But last year was very much a stasis year in terms of hiring.
Yeah, I'm wondering about long-term implications of this. I mean, because if we think about it from the perspective of immigration in this country and the way that the labor force will be changing in the coming years, where workers are going to come from, especially for certain jobs in the trades, for example, in construction, in home building, which we know this country desperately needs. What is your view there?
Yeah, well, I would add to that home health aides and
an aging population,
right?
yes.
So, yeah, well, if you look at the BLS projections of the jobs that require the most absolute increase in workers and the highest percentage change of workers, healthcare has been in that list for at least the last decade. And of course, we're also going to need construction workers to build homes. And a lot of these professions draw upon an immigrant population. So it's certainly, I mean, to borrow Powell's phrase, which is still apt, we're in a very curious balance in the labor market. And of course, if we have fewer or lower population growth, wherever that comes from, we know that you have to make up that for potential GDP in terms of productivity. And while we seem to be in the midst of a pretty solid period of productivity growth, that lack of labor force growth is a long-term problem.
So, yeah. So I'm really wondering, I think about, you are currently a board member on the National Bureau for Economic Research. They are the official, we all know that, the official arbiter of recession. So the start and the end dates. Where are we in this business cycle? And as you look at these longer term trends, maybe with the U.S. labor market, what does it possibly mean in terms of our economic cycle, how that might change, and maybe how it might be more stressed in the future?
Yeah, well, I mean, certainly if we look at labor force growth, that's generally speaking more of a cyclical thing. A structural thing. However, when we look at what happened with COVID, right, we had a big decrease in the number of people entering the country during COVID. We had some makeup and a big increase for several years. And now we're at this place where we're not having that many people enter the country. That has distorted a lot of the data. In addition, when we look at the labor market data, it's also distorted by the layoffs during the pandemic, the rehiring, the frenzy to rehire, the fear and labor hoarding that existed for a while. And so as I look at the business cycle, what you're forced to look at is things other than the labor market, in part because that data is so distorted. And so if I look at something like corporate profits, they're actually looking pretty strong. And we've never entered a recession when corporate profits are growing. Usually corporate profits begin to decline a little bit prior to a recession. It's a really important indicator. With that said, the economy has also withstood massive shocks last year, not just on the labor force side, but again on the tariff side. And we seem to be sort of plateauing in terms of the volatility in that regard, right? We seem to be sort of reaching this sort of equilibrium, albeit with higher tariffs, that I think firms are going to be able to better plan. And so I would say if we were to make a baseball analogy, it looks like we're in I don't know, the sixth or seventh inning. It's hard to say how much AI and that diffusion of AI is either going to extend the expansion or perhaps cause some significant disruptions.
Speaking of potential disruptions, we have to end with talking about geopolitics. We're going to be talking to Anne-Marie Hordern in just a minute. She's actually in Venezuela. You've been a member of the National Association for U.S.-China Relations since 2004. Geopolitics, not just between the U.S. and China, but the U.S. and the Middle East, the U.S. and Canada and Mexico. What relationship, in your view, could be one that, if it does unravel or if it does change, could be the most damaging to the U.S. economy and the investing economy?
Well, look, and I'll add Canada with Mexico. Since NAFTA and then the USMCA, which I must point out is really the TPP, right? So the Trans-Pacific Partnership, to which Canada, Mexico, and the U.S. were all a party, fixed a lot of the problems with NAFTA. And so the USMCA really pulled from that agreement that took years to negotiate. And these trade relationships are very deeply integrated. If in the renegotiation of USMCA, we see a breakdown in that would be deleterious to the real economy in the U.S. and, of course, would then impact capital markets.